Okay, so we're going to move quickly into the next session. So we're going to welcome Hoolie of Coinbase Ventures and Daniel of QBE Ventures to come to the stage. We're going to get into their approach to not just, crypto and Web3 and blockchain, but all things related to the investment approach of Coinbase. So thank you both very much for taking the stage.
All right. I don't know if cooties, it's all right. All right, thank you guys. So just a quick introduction on my side and shameless plugs. So my name is Daniel Wypler. I'm a partner at QBE Ventures. We're a global insurance company focused on commercial insurance. If anyone's interested, crop is our big thing in the US, so come talk to us. But yeah, we mostly do Series B, $5 to $10 million checks. That's our space. But you're not here to hear from me, you're here to see Hoolie. So we'll turn over to you and get this started. So I think there's a lot of misconceptions about crypto, what it is, the space. Could you just maybe demystify a little bit of who you are, what is Coinbase's role in the community, what is Coinbase Ventures investing in, and maybe clear up some of those misconceptions?
Sure, happy to. My name's Hoolie. I look after everything for Coinbase Ventures, which is the early and strategic stage investing arm for Coinbase Global, the largest crypto exchange in the United States. Yeah, crypto is a funny topic. It creates a lot of emotional responses given the history. Coinbase was founded around a mission around increasing economic freedom. I think a lot of the inspiration for the entire industry dates back to the Satoshi white paper, the genesis of Bitcoin, and this concept of a fundamentally new form of money and financial movement that was internet native and just never had existed before. The company has grown a lot since starting as just a Bitcoin wallet. We are a multi-platform exchange across the world, a retail brokerage. We are the largest institutional custodian of crypto and digital assets. We custody the BlackRock ETFs, multiple things, and increasingly payments and stablecoins have become a core part of our business. And so the genesis of Coinbase has grown to just follow the entire movement of this industry from a cypherpunk forum idea into what we view as a fundamental shift in how the financial operating system works with blockchain technology. And Coinbase Ventures really started as an experiment. When I joined Coinbase, it was a blog post with, hey, we are Coinbase Ventures and we're making investments. There was no plan, no strategy. There was actually no one fully dedicated full-time to Coinbase Ventures. There was a dozen folks around the company working on it nights and weekends, and it really started with a very simple set of ideas and mandate. We saw that we were kind of a first mover and vanguard in this emerging new startup ecosystem, what we believed had deep conviction on a secular technology shift and trend. And we felt it was important to invest and support in exceptional founders and help seed an ecosystem around crypto. Happy to go into more into like how we operate, all that stuff, but crypto, it's the definitions around it, it's open, it's permissionless, it's global. That creates all types of different behavior. I think the narratives and headlines get caught up on the bad actors versus the fundamental kind of progress that's been made. And it's crazy for me to be sitting here now thinking about, Larry Fink is custodying, a traditional product with Coinbase. So the space has matured. I think for folks in this room, a lot of the Bitcoin bro, Miami, Lambo things, like ignore that, focus on blockchain technologies continue to permeate all financial services. It's hitting payment rails, it's hitting how things are, digital assets are traded. And I think it's going to be important for everyone in Fortune 1000 to be aware of and think about.
Yeah. So 155 deals, according to PitchBook, since 2024. I guess maybe for the audience, just talk us through how do these investments maybe differ from a traditional investment one of us might make. How do you look at the diligence process? And then also maybe some of the structural differences. I mean, you're doing stuff that's, on-chain allocations, paying in stable coins, things of that nature. So how does your world maybe look a little bit different to ours when you're making these investments?
Yeah. So when we started, again, it was kind of informal and very loose, a broad mandate to just back exceptional founders and builders who were pushing the ecosystem forward. We've done over 600 investments since we started. It happened very organically how we were making those investments. Sometimes it was a Coinbase employee who was going off to start their own thing, and we wanted to have a consolidated way to support them and invest behind them. We had investors on our cap table and on our board who were bringing us and showing us investments that it made sense for us to have exposure to. Now we operate very much like a typical seed Series A fund. We have multiple strategies. We still write kind of higher velocity pre-seed and seed founder stage checks, but we spend most of our time in institutional rounds, seed, Series A, with ownership heuristics and things that any VC fund would think about. We also can do liquid token crypto investing. And so that's probably the biggest divergence. We have classic enterprise value equity investments, and then we also have projects that either launch crypto tokens or have never done a private VC round, but are viable protocols in the ecosystem that we'll invest behind.
Very cool. And just going back to the one thing, so is the most of the, where's most of your strategy focus? Is it strategic investments to enhance the Coinbase parent company, or is it more about the ecosystem, or a little bit of everything?
Yeah, I think that's what's made us really unique in that we're financial ROI first. We're trying to construct a classic early stage venture portfolio. We will go out and we'll never invest with the primary rationale being, hey, this is a potential M&A outcome, or there's a BD relationship or deal here. We're really trying to operate like founder first, pure classic investing model. That being said, the strategic value has been having this portfolio of almost like an index bet into exceptional builders in the space at the earliest stages. Downstream has yielded a ton of strategic benefits. So whether that's having a sense of, the way I'd like to think about it is we're trying to get on the cap tables now that will matter for the company and the industry in 3, 4, 5 years. So having insight into how some of these projects are performing, how that might influence our own product roadmap and product strategy, and then sometimes that M&A conversations where we have a relationship with founders over a long period of time. You're kind of underwriting something that's like a line versus dots. And then a bunch of BD commercial relationships can come out of the portfolio as well. But inverting instead of, hey, we need to have like some type of commercial agreement to make the investment, let's make the investment because objectively we're excited about the founder in the space, and then being loose about how the kind of strategic value will manifest over time.
Cool. And I think maybe just pulling on that vein for a second is, how would you talk to some of the people in the room about, okay, hey, maybe you don't have a crypto strategy, but this is coming for your industry. Putting that first foot in the, in the water and understand, okay, this is what you should be looking for, or these are the areas maybe you should start with. I mean, how to explain to my, how would I explain to my IC or my, maybe my comms team about, getting into an investment in crypto?
Yeah. So you can think about it as like there's an unregulated or not yet properly regulated world of crypto, and there's a very regulated world of crypto. So that's just one like risk profile to isolate on. Honestly, where we're spending a lot of time these days for our investments, these look like classic right now, like classic enterprise value equity companies, and that's really been driven by the passage of the Genius Act last year and the clarity we have around stablecoins. So examples like we invested in Bridge and Privy, which are acquired by Stripe. A lot of the companies I'm looking at now, they're neobanks, they're payment processors. Like these are things that I think most folks in this room would have, mental heuristics to invest around. It's just understanding that there's this like secular technology enablement tailwind behind a bunch of these businesses that make it interesting for you.
Yeah. All right, well, I need to ask, next 3 to 5 years, I mean, AI, everything. I've been listening to some of your podcasts. You're talking about, agentic commerce and the kind of intersection of AI and crypto. What are you guys getting excited about for the next 12 to 18 months?
Yeah.
Hard question.
Yeah, hard. So a couple of things. I'd say continuing to invest behind stablecoin proliferation. The rules of the road are very clear there, and that is a space where if we're at basis points of penetration now, there's clear 10 to 100x growth on penetration. We're spending a lot of time in AI agentic land, and our belief is that there's going to be a big agent-driven economy and commerce. A portion of that is going to be best suited to be operating on crypto rails because it's internet native money, and it's likely a net new set of financial transactions versus what happens today with traditional commerce or B2B transactions. Where we get excited is a world of machine-to-machine, agent-to-agent payments, where we're scaling trillions of sub-cent transactions in real time on blockchain rails. So that's a big focus for us. And then the third bucket is and it ties to the Coinbase product strategy around everything exchange. So basically, our view is anything that can be tokenized or traded is going to be, and we're excited about the progress with regulatory clarity on market structure in DC. So everything from prediction markets, perpetual futures. I'm looking at a company right now that's tokenizing Pokemon cards. I think if it can be traded, it will be traded, and that's a space where we're spending time.
I think following up a little bit on that, what do you think you guys have maybe called wrong in the past couple of years?
Plenty of things, and one example is we got very excited about developer tooling specific for crypto and made a bunch of investments there. It's really hard to scale, like venture scale businesses for that much of a niche. And what I think we called wrong was the developer tools would actually just, for blockchains, would just morph into the classic developer workflow sets. Like a developer is just going to use GitHub. They're not going to use GitHub for crypto. And then just timing can be tough. Like we've called things, I think, right that were too early, and that's just classic in like early stage venture. Plenty of things we called wrong, yeah. but the net portfolio construction has worked out great.
All right, cool. Only have a few minutes left, so just wanted to ask, I think a lot of us are probably novices in this room, maybe have a little bit of idea of how crypto works, or maybe we have a couple coins or something. But in terms of educating maybe our parent companies and our teams, how do you think we should really engage with the community? Is it, is there a subreddit or something, or a Discord we should be joining? Like, how are you keeping informed? And then I would say, kind of following on to the question before about what you're excited about, where do you think, we're a 140-year-old insurance company. Where do you think we should be kind of taking our first steps into maybe, experiments?
Yeah. A lot of ways to stay informed, and I think it's important to just have an open mind and consume as much as you can. Shameless plug, you can always look at the Coinbase Ventures blog and the Coinbase institutional. We have dedicated institutional content, which I think is geared very well for the audience here. If you look at the kind of investor, like the main investors on our cap table, the Andreessens and the Union Square Ventures, like they put out a lot of great educational content. For where to think about something, where things start getting interesting for y'all. I think in the next 5 years, we're going to stop talking about crypto as just like its own thing, and it's going to be so embedded from a technology perspective into classical business models that you won't really need to make the distinction. The biggest area is around payments and stablecoin payments, where we're seeing Fortune 500 companies adopt this. They're adopting the wallets, they're adopting the underlying blockchains. And so derivatives of that trend, I think, are going to affect pretty much everything in financial services.
Cool. And then I guess really just kind of final question here. Strategically, where do you think Coinbase Ventures structurally, you guys have been around for a little while, you've made way too many investments, but how is your team kind of structurally evolving as the market's changing? Are you still kind of focused on a analyst, associate, principal, partner kind of model? Are you outsourcing a lot of that to Claude, like probably most of us are. I mean, how are you guys kind of structurally changing now? Also, you're a regulated entity, you're publicly traded, so different, I would say different drivers probably than when you were public, or private, sorry.
Yeah, on the going from private to public, honestly, not that much change in how we operated, but I think that's because we were, as a company, Coinbase has always kind of been structured to be super compliant, and we were geared and ready to be a publicly traded company. From a team construction perspective, we have a core team of eight folks on the ventures team that are dedicated. We also rely on this overlapping Venn diagram of all the business facing teams that are like external company facing, so corporate development, business development, and us. And we have kind of a cohort of like main contributors that will, if we're talking to startups and companies, we kind of route our way. Team construction wise, it's funny. Right before this, was just on a call with the team. We're hands-on with Claude. We're hands-on with all the AI tooling. We're trying to leverage that where we can to automate as much as we can. But what the models are not going to replicate is relationships, taste, judgment, the being able to read a founder's intrinsic motivations and like underwrite a large investment. So getting leverage on the analytical and sourcing side, but as far as we can.
Yeah, perfect. All right, well, I think we're just basically at time. Any final shameless plugs you want to make, or
no?
Buy some crypto?
No,
get involved?
No financial advice, and no tokens to shill. My parting thought would be what I said earlier. The space has matured dramatically. We are about to have very clear regulatory clarity. So whether it's trading or payments, I think everyone should just be ready for blockchains to be coming across your desk in a lot of different ways.
Awesome. Well, thanks. Thank you, guys. I think that's us. Oh, we gotta do the photo.